Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. This week's video is going to be focusing on the 5th week of October. And as you can see, we've hit a new major milestone of 140k. So we finished the week last week on £137,399. And we currently finished on £140,122 for a 1.2% gain, which equates to £1,723. If we show the net deposits, I'm getting close to the 100k invested, which I should hit at some point soon. And if you look at the last year results, the portfolio is up £26,500. And since it's begun in April 2021, we up just over £40,000. Now I have tracked my journey, and this is now video number 47. And I've tracked it since about 70k. So it's doubled what I've shown every single buy, sell throughout that journey. So the portfolio is moving on really solidly, which I'm really happy about. Now, there were a number of earnings. I don't want to make this video too long, but there were quite a few companies, and the sentiment that I'm seeing, or the market is seeing, is that a lot of companies beat on earnings per share. And what that signifies for me is, I don't think that's a coincidence that so many companies did beat on that metric, which looks at profitability. And I think a lot of companies are now showing the signs of AI usage. So for me, this is quite solid sentiment that all this money that is being spent is ultimately turning into profit. So it's getting an ROI, which is important in this AI boom, that companies justify their spending, and therefore it continues. So that was quite important. Now, I started this little tracker since the beginning of September, essentially, on how the companies within my portfolio are doing on a week-to-week basis, which for me is quite insightful, actually. I can see what companies are lagging, what companies are consistent. And even though pretty much all the companies within my portfolio are in green or in profit, this allows me to see which ones are lagging a little bit. But as you can see, with my portfolio being up 1.2% for the week, a lot of companies have done well. Now, the ones that haven't done well, and I'll get into that a little bit now, are United Health, Oscar, both seeing a little bit of a drop-off in the last week. BMNR, as Ethereum is down a bit, which this is fundamentally a holder of Ethereum. HIMS, now this is a company I'm watching now. Their earnings are next week, and this is quite pivotal. I did say during the last earnings that they had that I was going to give them at least one more earnings. So let's see how they do, but this is one that I'm looking to potentially cut because management have been struggling of late in terms of this company, but ultimately it's about the earnings. So let's see how they do. And the big one was Meta, minus 11.8%. And let's have a look at why that was. So a lot of companies did well in terms of earnings, but Meta was one that didn't. And this is the reason why. Meta stock plunges as profits take 16 billion tax hit. So shares of Meta were down 9% in extended trading Wednesday after the tech giant posted earnings that missed analysts' estimates. And the big number that was missed was earnings per share. However, earnings per share outside of this one tax hit would have been $7.25, which would have been a big beat. Analysts were looking for $6.70. Now, if it wasn't for this one-off tax charge, then Meta 2 would have had a solid, strong beat because it beat on revenues as well. Now, for me, this became a buying opportunity because Meta is a solid stock and it would have otherwise beat earnings. So in terms of the guidance given, looking ahead, Meta said it expects fourth quarter revenue in the range of 56 billion to 59 billion, ahead of analyst consensus, and told investors it expects a significant reduction in its US federal cash tax payments for the remainder of 2025 and beyond. So for me, this became a buying opportunity, and that's what I did. Now, if you follow me on Substack, I did mention that I will make announcements of when I intend to make purchases or sales within my portfolio. And this is what I wrote. My plan is to add to my Meta holding today after the drop yesterday. If it wasn't for that one-off tax charge, earnings per share would be a solid beat. I would either trim my Google holding for profit or deposit some extra money, possibly both. And then later, during the afternoon, I wrote, I have just added 2 shares via deposit and my Centrica dividend. So I bought 2 more shares at a cost of £1,034. So this is how I funded it. I made a £1,000 deposit. I was going to try to trim some of my Google holdings, as after its earning, it got to as high as almost $300. But obviously with such a big surge from about 270 before the earnings, a lot of people took some profit. And by the time markets opened, there was a huge drop. So for me, that didn't make sense anymore. So I bought some additional shares via deposit, which leaves me with only £1,000 remaining in my ISA allowance. So this is going to curb some of my deposits for the rest of the year after I make the last deposit. And I'm going to have to be doing just buying and trimming within my portfolio. My plan is to do quite a bit because I think there is going to be a bull run towards the end of the year and beginning of next. And at that point, my plan is to potentially trim some holdings, take some profit and have a bigger cash position to try and take advantage of the bigger dips that are potentially due to arrive, as I can't buy anymore with my own money. Now, going back to my Substack, I do make other short posts, and also my aim is to try to do a midweek post. So I did one here of my portfolio and what's happening. So you get more than once a week update on my portfolio. But as you can see, last week there was a period when we were up 5.5%. And now this dropped later on by the end of the week. But it was a very, very solid week. So if you want to join my Substack for more regular updates, you can copy this link or you can scan this QR code and please join. And for those of you that want to copy my portfolio more strictly, you can do as I make those buys and sells, as I will notify you as I do them. While you're there, if you want to support the channel, and you can do that for free by pressing that thumbs up button, giving it a quick like, press that notification bell so you know when I'm uploading the next video, and also be a subscriber so you can follow my journey as I continue towards 150k and beyond. So I did get one dividend this month. That was from Centrica for £34.75. Let's have a quick look at my Centrica position. So Centrica, we're up over 60%. This is a company that has done really, really well for me. And it's a strong dividend payer, as you saw. It pays me about £35 a quarter, maybe a little bit more. And this is my position. I have just under 1,900 shares, an average cost of £1.10p, and it's currently trading just under £1.80. So if we look at the overall portfolio, Google still remains my biggest position. And as you can see, it is absolutely flying up over 65%. There was one point during this year where I was down. So it's had a phenomenal rise since about April. And my average cost is $162.93 for 86 shares. And as you saw earlier on the week, it hit an all-time high of just under $300. So this is one of the main reasons why. Let's have a quick look. Google stock jumps as Q3 earnings revenue surpassed Wall Street's expectations. So Alphabet, which is the parent company of Google, reported quarterly revenue of $102.4 billion, ahead of the $99.85 billion the market expected, and up from $88 billion in the same quarter last year. Now, this is quite important. In the current AI climate, cloud revenues are really, really important. And Google Cloud saw revenues rise 34% to $15.2 billion from $11.4 billion a year ago. And this is one of the reasons why the stock popped so much. Analysts were expecting $14.8 billion. So we're talking about a good $400 million in beat. And this is one of the first companies that is actually showing a return on some of the investments that it's making. And this is what the market really liked. Google's management said AI generated billions of dollars in revenue for the segment during the quarter. Now, a lot of companies are investing in AI, but not every company is already showing the big benefits of it. But this is one of the companies that is. So a solid beat from Google. Next is Robinhood. Now, that is due to announce earnings next week. So this is one that I'm really keen on seeing how it does. As you can see, it's the second biggest position within my portfolio. So I'm really looking forward to that. If we look at some of the other earnings that I am looking forward to, let's look on Monday. We have HIMS, which is a really pivotal one because this is one that potentially could get cut for my portfolio. If the guidance isn't good, then yeah, I'm going to have to consider dropping this one out. So let's see. So this is a pivotal one for that. In terms of, I don't own it, but Palantir is one that a lot of people are invested in. So that's a big one. On Tuesday, we have, not within my portfolio, but Norwegian Cruise Line. That's quite important because that's going to affect how Carnival Cruises does, which is within my portfolio. You got AMD. This is one that potentially I could be adding as they are quite a solid company. And they're building a reputation of having chips not as good as Nvidia's, close to, but at far cheaper. So there is a chance that they start building up their market share. So this is one that I could be adding. Right now it's a bit expensive, so I won't be, but let's see how the earnings does. There might be an opportunity there. In terms of Wednesday, the big one is Robinhood. I'm hoping that it does well. On Thursday, we've got Oscar Holdings. So this is another one that I've built a position on, and I'm hoping it does well too. And Friday, no one really that affects my portfolio too much. Now, one that isn't listed on here is IREN, and that's a holding of mine, which is going to be reporting on Thursday, I believe. Back to the portfolio, Imperial Brands up just under 70% for a 3.7k gain. Meta, as you saw earlier, had a big drop in its earning report, but for me, this is a solid buy. I still think it's a very solid company, and this is my position, just under 18 shares, an average cost of $595. I solidly believe that this will be a $800, even $1,000 company soon. So this is one that I'm potentially going to be adding more to. Actually, if it stays at this kind of levels, I might look at trimming some aspects of the portfolio, including potentially Visa or MasterCard. As solid as these companies are, they're underperforming the portfolio slightly in terms of returns, but they have a reason that they're in there. They're very solid two companies that are going to give me 15 to 20%. But at this current climate, there are companies that are delivering way more than that in the bull market. In more bear markets, Visa and MasterCard are going to show their worth. And that's one of the reasons that they're within the portfolio, but they can be trimmed, is my point. Microsoft, they had good solid earnings too. As you can see from here, they had a really big spike after earnings and settling at $517 at the end. Nvidia, now this company absolutely flying, became the first company to hit the $5 trillion mark in terms of market cap, up just under 9% for the week. And this company is moving from strength to strength. If you look at the 1-year chart, it is up just under 50% and is pivotal within the market. Tesla, now this is a company that potentially something I can trim. It's been on a massive tear. It's at over $450 right now. I have just over 18 shares with an average cost of $207, and it's currently at $456. So over 110% in gains. If you look at the last 3 months performance, it's up 50%, and for the year, it is up 83%. Now, potentially there could be a slowdown in Tesla in terms of vehicles being delivered because they used to get a tax incentive for purchases. Now that is gone. That might affect the company's revenue numbers, but my understanding is that there is good solid progress in terms of the robo-taxi, so this should help its earnings going forward. Carnival up £3,000 with a 6.4k position. Broadcom up almost 3k for a close to 95% gain. Oscar Health is going to have earnings next week. Let's see how it does, and so will IREN, the first position that is down on the portfolio. BMNR, again down, I mentioned earlier. Ethereum is down at the moment, so that's one of the reasons that is down. United Health, small loss of just under 1%. Amazon, now let's have a quick look at this. Now this is a company that absolutely smashed earnings. If you've been watching my videos, I have been saying that it's been lagging in terms of performance, in terms of the rest of the Mag 7. And at some point it was going to show its worth, and this is the earnings that it did. So let's have a quick look at that. Amazon stock soars to record highs as AWS growth powers Q3 results. Remember I mentioned cloud. This is their version of their cloud servers, AWS, and this had a strong beat. Now, Amazon reported earnings per share of $1.95 when the streets were expecting $1.58, so a huge beat. and revenues of 180 billion on expectations of 177.8. So this earnings per share was very solid. And AWS bought in 33 billion with expectations of 32.4 billion. Now, this is one of the reasons why the stock popped at the end. And as you can see, the massive green candle after earnings, it was trading about, 225-ish. And then it went all the way up to $255 and settling at 244. So this was a much needed boost for Amazon share price. And it's now back at the table. Grab, this is another one that has actually got earnings next week as well. So this is a new position of mine. Now, I watched a few videos with the founder of Grab, Anthony Tan. Now, we invest in companies mainly to make money, but you can also support companies that are doing good things. And Grab, within the Southeast Asia economy, it's really quite pivotal. It's the Uber of that area. So it does ride hailing, it does food deliveries, and it's propping up the economy a little bit because there's a lot of people that it employs that are gig workers, and the guy is very passionate about this company and is actually wants to do good. And those kind of companies, similar to Costco actually, which looks at customers first, these kind of companies do well because they look after their employees. And this is what I got from some of the interviews that I'm seeing. So I'm really hoping that it does well for my portfolio and also as a company as well. HIMS, big earnings next week. Let's see what the guidance is gonna say, but this is one that could be cut from the portfolio if it doesn't give solid guidance. Centrica, as I mentioned earlier, paid a nice dividend to me last week, up 1.3k. Costco, the one company I mentioned earlier, I think this company is really customer centric. They are tight with their margins, trying to give people best possible costings for some of the things that they buy. And if you ever go to Costco, you just end up spending money because they've got such great products. Apple, now this is another one that has come to the table. So if you look at the 1 year performance, they spent a long time, around 200-ish, just a bit above. Again, another one that is, in terms of its size, a little bit disappointing in terms of performance, but this has now become a buy again because it had good earnings. So they had revenues of 102 billion, topping analyst estimates and representing an 8% increase from the previous year. Now, what's really important is this. Apple said the upcoming Christmas and New Year's period to be a blockbuster one, forecasting overall revenue to be up to 12% higher than the same period last year. This is a massive number. And off the back of that, I personally think that the stock is now a buy. The market agreed. As you can see, a big spike and settling at 270. But overall, this has led to Apple having a respectable growth in share price for the year, up over 20% now. And the last two small holdings, but again, now performing really well again, are ASML, up 28%, and KLA, up almost 50%. So that's the overall summary of the portfolio. As you can see, hitting a major milestone of £140,000. Really, really happy about that. Thank you very much for watching this video. Please, if you can, give it a quick like. Subscribe if you're a new viewer, and I will see you on the next video.